Right, folks, it's the evening of Sunday, what is it, Sunday, no, it's not, Sunday, May the 9th, and it's about 10:30 at night UK time. I haven't done a video for a while because we've just had really difficult sideways markets. There's really not been anything to talk about it. I found it very difficult through April. I don't mind admitting that. I'm not really good with markets that go up one day, down the next for days and weeks on end. This is a good example here with the dollar index. Just looking at over the last couple of weeks, literally up one day, down the next. No pattern, no trend, nothing to go on. I find this difficult. Moving averages flatlining, just proving the fact that the market really has only gone sideways for a couple of months. We just hovered around the 100-day moving average, the blue line, literally maybe 100 pips above it, 100 points below it, and then swinging back. Just 100 pips either side of this 100-day moving average. I found that very, very difficult. Anyway, finally, it looks like we might have some movement. You can see a trend line going back here. Let me just close this up a bit. You can see a trend line going back a little bit there to the beginning of the year. We've broken below that. We've moved well away from the 100-day moving average, and on the weekly chart, we have broken well back through the 200 week moving average, bearish engulfing candle on last week. We've already broken some support that you can see on the monthly chart here, so I suppose there was some bias to the downside, but we just couldn't get to grips with it when we had that big sideways movement on the daily chart. Anyway, this looks quite negative for the dollar. I think the bulls really have completely lost control now. We've even got a nice big bearish engulfing candle on the weekly chart there. You can see it. We made a new high. Well, sorry, we beat the previous week's high last week. So all looked good for bulls initially as we were holding above. Again, confusing at the beginning of the week. And then, of course, we plunged on the non-farm payroll number on Friday, leaving a really significant bearish engulfing candle on the weekly chart for the dollar index. So this all looks pretty negative. Aussie dollar has just been a nightmare for the whole year to trade. This is what I'm zooming in on here. Since January, up 1 week, down the next, up 1 week. Then we had a little bit of a run. Then that was completely wiped out. And then again, down, up, a little bit of a dip, a little bit of a recovery. You know, no trend to speak of, really. Although I could argue that, well, I could have argued that might be a very stretched out head and shoulders pattern, but I don't think that's even the case now. Anyway, last week, as you can see, we got a bullish engulfing candle. Doesn't mean that much in a sideways trend, I will admit, but we have now broken above previous highs here, which you can see we were really holding, and we're through there, closed above it. So I'm hoping again, having held a 100-day moving average, that we're finally going to get some direction in the Aussie. Now, this is absolutely impossible to trade. This period here and this period here. How do you do it? Literally up one day, down the next. But hopefully we've now got some direction. I'm praying for a swing trade opportunity, and I'm praying that the Aussie is now going to see significant gains against the US dollar. I'm thinking we'll see 80.00, which is the previous high in February for this year. Don't think that's a major resistance level. I think we can get through there, and I think we can get up to sort of 80, the mid 80 area, 80.65, 81.00, and then the 200 week moving average at around 81.30. Now, New Zealand dollar, this is getting interesting. Look at the green 500 week moving average resistance. It's done so well all through 2016, 2017, 2018, and now we're testing it in 2021. We managed a spike up above there on a weekly basis back in February, couldn't close the week above there, so we have not closed the week above the 500 week moving average on the New Zealand dollar chart, which is now around 73.00. We have not. We're testing it again. Can we break above there next week? Can we break and hold above there and get a really good run? I think we probably can. It really is a significant level. You can see we're testing it right now. It is the key resistance level of the week. If you want to try a short, fair enough. Give it 30 pips. It's a low risk reward. But if we break above it and if we hold above it, obviously we need to close the week above it. We won't know that until Friday. But clearly that is the main resistance. We have at least beaten the April high, so I'm really hoping that we can get some direction on this, and it would be nice to see a break above that resistance, and then the market can really fly. 500 week moving average on the Aussie yen has also been really significant. Again, look at this, just sideways. We've got spikes up with an unchanged close, spike down with an unchanged close, and then up, down, up, down, up, down. Hey, how can you trade this? Really, really difficult for the Aussie yen. Has been for weeks, as we were held by the 500 week moving average at around 84.5, 84.40, 84.50. We did not manage to close the week above that. We managed it back in first week of March or second week of March, and then it failed. So that's a big resistance level. Finally, we've broken above this level. I'm hoping that now, at last, we've got some direction. We can see the Aussie rocket against the yen, really see this pair power on, get some direction. I think now that we're through it, fingers crossed, this is a swing trade opportunity where we can buy into the Aussie yen and see the thing fly. We've got to get up through the 61.8% fib. I don't see that as such a strong resistance level. That's at 86.40. That's my next target. It's about 120 pips away at the moment, as you can see. I don't think that's going to hold us the way the 500 week moving average did. Now, obviously, we've got support down around 84.50, 84.40. I don't think we'll see that level again. I think we're going to fly, but just bear that in mind. If we do come and dip down, that should be a good support level. I've talked about dollar weakness. We can't see much on the dollar yen chart, although the fact that we're below the 200 week moving average, the red line, I think that's got to have some significance. Now what you've really got to look for is this trend line going back to January. So it's the 2021 ascending trend line. We're bang on it. It's at 108.40, 108.30. So we got down and just kissed it on Friday and at 108.32. Break below there, break below, let's say 108.25 should be very negative for the dollar against the yen. Slightly confusing picture for the yen because I've just said it will probably go lower against the Aussie, but it may go higher against the dollar. I think that really just emphasizes the dollar weakness that we're seeing, because when you look at the euro versus the yen, it looks like the euro can push higher significantly against the yen. We've broken this 16-month trend line resistance well through it now. On a weekly basis, we have closed above it. I don't see 132.36 as a big resistance level. That was the previous week's high. I think we can sail through that, and then I think we can test this trend line in the low 133 area. This is a very significant trend line. This goes all the way back to 2015. So that will be the one to watch. A break up through there and we can just absolutely fly. So just a little, not a little trend line, it goes back to 2015. It is significant, but that will be the next target if we can hold above the trend line, which comes in at around 131.80, and I think we can. I think we can push higher. So again, yen likely to move lower against the euro and probably the Aussie as well. Now look, this is another potential big swing trade opportunity. So Canadian dollar has been doing very well against the yen, but we hit this what should have been very strong resistance from the 200-month moving average and this huge trend line going all the way back to 2007, massive. I really thought this was a big resistance level, but we've sailed through it really. We've closed above it on the monthly chart. Well, we haven't closed the month yet, of course, but if I look at the weekly chart, we've closed well through that trend line now, and the 200-month moving average on the weekly. So we're well through that. We've closed well above it. This is a very bullish breakout. We had paused back here. We're through it. We've got some resistance from the 38.2% fib, which is around 90.20. I don't see that as a significant resistance compared to what we've just got through. So again, maybe the yen is going to collapse against the Canadian dollar. Canadian dollar surprisingly strong against the yen. I really thought that resistance would hold. We were very overbought, very oversold. Again, the Canadian dollar has been oversold against on the daily chart for a while. It's oversold on the monthly chart. We've just been trending lower. Look at it on the monthly chart. We've really collapsed. Here we go. Monthly chart. Look, we're at one big blue candle, one small candle in the last, I think it's 13 months. Just down, 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 down. Very oversold on the monthly chart. Nobody cares. The market just continues lower. And now that we've finally broken the 500 week moving average, the green line, it looks like it's the dollar will continue to sink against the Canadian dollar. So Canadian dollar strength again showing weakness in the US dollar. This kind of shows the Aussie strength, because the Aussies against the Canadian has bounced off the 200 week moving average. So maybe the Aussie is slightly stronger than the Canadian dollar, but they both look pretty firm at the moment. Right, euro versus the US dollar. To be fair, I've struggled with this. Maybe I shouldn't have struggled. Maybe I'm not really justified. Maybe I should have done a better job. I still can't make much sense of it, to be fair. The moving averages are flatlining. The Fibonacci levels are not really being respected, but we have had some strong moves to the upside. We are holding above the 100-day moving average clearly. What can I show you? We've got this trend line going back to June 2020. So that is, call it an 11-month trend line. This will be the key resistance of the week. That is up around sort of 122, 122.00, 122.10. What does the weekly chart show me? Not a lot. But we do have this bullish engulfing candle. So we bounced off the 200 week moving average. It has been a really good support and resistance line. Bounced off it last week. Bullish engulfing candle. So I have to take this as positive for the market. We're not overbought at all, actually. So yeah, I think probably I have to favour euro US dollar heading higher. We just have to get through that resistance level at 122.00, 122.10. So we might pause there, we might pull back. Just watch that. But so far, certainly on the longer term charts, that's a pretty positive chart. I'm not massively confident, but I'd rather be long than short. I'm not even going to bother with the pound. It's still going sideways. Gold, pretty horrible. I really didn't find this easy to trade at all. This sort of 2 week period when we just went sideways, spiking up, pulling back, spiking down, moving back up again. We didn't respect the levels particularly well. All we did do was hold the 100-day moving average. Now, that was obviously the level for last week that we had to worry about. At the beginning of the week, it held perfectly. So if anyone was selling it up there, they did quite well. Finally, on Thursday, we rocketed through. I don't even know what the trigger was, really. But anyway, gold rocketed through the 100-day moving average eventually and continued higher on Friday. So that was a very positive bullish breakout. We've got the 200-week moving average, 200-day moving average, the red line, up here at 1850. We haven't quite got there, so this will be key. Don't think it's a massively strong level. Shorts could be a little bit risky because I've talked about gold building a bull trend ever since we double bottomed at that really important trend line. We just didn't get the propulsion for this recovery that I expected. It's been a real long drawn out affair and I've really struggled with it. It's been so hard to run a long position in gold. Anyway, maybe now we can finally build some momentum to the top side. Watch 1850. If we can get through 1850 this week, then gold really should take off. And as I say, probably think, dollar looking weak. So hopefully the gold really can then start to build some momentum on the upside now if we get through 1850. Silver's been worse than even gold to trade. Look, this is December through to where we are now. I mean, no pattern, very random, up, down, I don't know, no trend to follow. The moving averages have been flatlining for months. The 100, the 50 and even the 200 now flatlining. So it just shows you no movement, no trend, no pattern, nothing. But finally we're pushing away from those moving averages. So hopefully that's also a bullish sign for silver. I thought that was going to happen at the end of April. Maybe now it's happening as we head towards the middle of May. Again, look, even on the weekly chart, what do you do with that? What kind of pattern is that? I really don't know. Very, very difficult markets in recent weeks. But anyway, maybe now precious metals can finally push higher. Markets do spend significant periods of time trading sideways, so really I shouldn't get so frustrated and I should do better in sideways markets. But anyway, oil. 500 week moving average, the green line. It's done a great job as resistance in the past. There it is. We go all the way back, and now it's resistance again. So around 66.00. That's the key level for oil. If we can push up significantly through 66.00, where did we get to? We got to 67.98. That would be the next target. Last week we only got to 66.58. I think 66.76. So that would be the target to beat this week for bulls if they really want to crack on with this. But initially the objective is around 66.00, 66.20. That is the 500 week moving average, and that is what is holding the bulls back in oil. On the daily chart, you can see that we have got some support down around just around 63.00, a little bit below it, maybe 62.70, 62.40. So that would be the support level on the downside if bulls want to try to keep control of oil. Okay, I think I've crammed everything in that I want to say within 14 minutes for this video, so hopefully I haven't gone on too long. Hopefully you've understood everything. If you haven't, do send me a message and I will clarify anything for you. Obviously I'll be updating the chat room throughout the day on Monday, and I'm just about to email the reports to you now.